And welcome to the Aaron Katsman Show. I'm your host, Aaron Katsman. We speak to you about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon to be financial capital of the world, Jerusalem, Israel. If you like this content, please hit the like button below. If you've not yet done so, please subscribe to both the YouTube channel and to the podcast. And if you think somebody might find this of interest, why don't you go ahead and click the share button and you can share it with them as well. So, a while back, not too long ago, I was at a family celebration, and one of the family members came up to me. I sort of coach him a little bit in terms of investing. I help him out a little bit. He's more into the real estate world, but he has some financial assets as well, some money, some cash assets. And I sort of like worked with him a little bit and how he should go ahead and invest. And he told me that he got an unexpected sum, a modest sum of money. And instead of listening to what I had told him all along, he decided to buy an ETF which invests in semiconductors. And it proceeded to obviously go absolutely bananas, as all of the chip companies, or most of them, have done, right? The Microns and Microchip and Intel and Nvidia and Broadcom and, yada, yada, yada. And he made, I don't know, 130% or so in not a long time, on his investment. He said, well, what should he do with it? So I said to him, congratulations. Don't be a pig. I gave him the old, sometimes the bulls win and sometimes the bears win, right? But the pigs never win. I gave him a little bit of that. And I said to him, why don't you just be thankful you had a great trade, and why don't you just get out of it and, go back to, regular index investing. And he said, well, but why should I do that? It's going up so much. And I said, look, nothing goes up in a straight line forever. And why not just be happy with whatever you made? We say in Ethics of the Fathers, right? Who is happy? Whoever is satisfied with their lot, right? You don't have to want more and more and more and more and more and more. You're happy. Okay, I did X. That's great. I'm happy. That's what true happiness is. And I said that to him. And he said, yeah, but you know what? It's easy, right? So I said, well, when are you going to sell? I said, buying is really, really simple. It's easy to buy a stock. The question is, the challenge is always, even for the best investors in the world, is when do you sell the stock? Well, I'll sell it when it starts going down. Well, when is that? How do you know when that's going to happen? He said, well, if it goes down 3 days in a row, I'll sell it. I said, well, how do you know on the fourth day it's not going to go back up? He said, oh, well, he didn't have an answer. I said, and how do you know on the second day it's not going to go back up? Or how do you know on the fifth day it's not going to continue going down? Right? It might go down, 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 down. It may lose 80% of its value. He goes, well, it's not going to do that. And I said, well, crazier things have happened. Plenty of hot stocks and hot sectors came crashing down to earth very, very quick. And he just didn't, he started to sort of see the light. But then I said, look, how do you know, right? You don't have any better information than anybody else has. In fact, you have less information because you're busy raising a bunch of kids and you don't really follow things. And you heard from some guy who happened to get it right this time. The same guy, who was preaching Bitcoin when it was at 120,000 and it's dropped by 40%. So you win some, you lose some, I guess, right? But how do you know when to sell? Probably the hardest discipline, I would say, in investing. And I'm not saying that I've got the secret juice, right? I'm not saying I'm God's gift to selling. I stink just like everybody else stinks at selling. That's why I'm talking to you. If I'd be really, really good in selling when it's time to sell, I wouldn't probably be doing this. Just so you know, okay? And it's not just selling hot stocks. It can be, indexes. When do you sell? So there are people out there, and I sort of fall into this camp, who say you should generally not sell, right? Especially if you're living in the world of indices. There's real no need to sell if you don't get too esoteric, right? If you're not going after sectors, if you keep things chocolate and vanilla, large caps, mid caps, small caps, tech, and international. There's really no need to sell unless, obviously, if you need the money or if you want to do some tax planning. Other than that, just let it run. Okay, because you're going to time the market. How are you going to successfully? Nobody successfully times the market. Very few people do. So to think that you are going to do it, probably not going to happen. If you own individual stocks, it's a little bit trickier, and you have to really follow them. You have to understand what's going on in the market in general. You have to, understand each company's financials, not just what they've done in the past, but what they're prognosticating. That's a good word. That they're going to do in the future. Listen to their calls, or at least read about their quarterly calls, especially what they're talking about, what's going to happen for the next quarter until the end of the year. Trends in the industry, it's very, very difficult. That's why people get paid lots and lots of money to do it. So to think you're going to do it, when you work full time and you're raising a family and you're, 20 minutes before you go to sleep, you're going to read up on it, chances are you're probably not going to be so successful. You really have, just like anything, you have to put time and time and time into it if you're going to be sort of successful. So there are those who believe you should sort of never sell, or sell obviously when you need to. But you don't have to necessarily know how to predict the market, but sometimes you need to have a strategy, an allocation of how your money is invested. I got a call from somebody today, or I had a meeting with somebody today. It's been a long day. And she showed me some of her stocks, which had never been changed. And so she sort of inherited money. It's been a few years, nothing changed. And I looked at it and she says, well, what do you think? And on the one hand, I always feel sort of bad because when they inherit it, there's always like this emotional connection to the person who passed. And they don't necessarily like to hear, well, that person didn't exactly, know what they were doing. But what I said was, and it had done okay because there was like a heavy bet on gold or whatever, which has done well. Okay. But what I did say is there's no strategy to this portfolio. It's just like, as I've said in the past, it's like sort of a potpourri or an aggregator of water cooler ideas, stock ideas that you hear when you're going to, get water or make coffee at work. Somebody, this week somebody was hot on this, and that week somebody was hot on that, and and that's what it is. But there's no rhyme or reason to what's going on in that portfolio. And that's what it was. And the fact of the matter is, to her credit, she understood that. And she said, you know what? That's exactly right. There is no strategy. So another time you want to sell is when you take an objective look at your portfolio and say, wait a second, nothing here makes any sense. Right? I'm trying to accomplish, my goals are X, Y, and Z, and I'm trying to get there by doing A, B, and C. And I'm just way off. I'm beyond the pale here. I have one of those portfolios of hot, I've got a hot stock portfolio, which is great when things go up, I guess. But boy, is it bad when things come back down. Never thought you could lose money so fast as when you have sort of a hot stock portfolio. Okay, so it's really some of the things you might want to do. Just tips. Everything has to be taken in its own specific situation. Sometimes people will take let's say you double like that, like the person I was speaking to made 130%. So why don't you just take, you could, one strategy would be take your money off the table and let it run, right? You got your money back, or maybe take it off plus a little bit of profit. And then whatever other money you have there, let it run. Maybe it'll double again. You can do the same thing. I don't know. But sometimes you want to just take some money off the table, right? You don't want to be that roller coaster, that yo-yo going up and down, because you don't get anywhere. The yo-yo and the roller coaster both come back to the point where they started from. You don't want to be that person, right? You want to ultimately you want to grow your portfolio. And if you're in that game of buying and selling, then obviously profit plays a major part, because that's the way you're going to grow your portfolio, right? So, but conversely, right? Ride your winners, right? Oftentimes people cut their winners too fast and they ride their losers and they ride them all the way down, right? These are all different things out there. These are all different concepts out there. And that's why it's so hard, because half of them contradict each other. And that's why most people are unable to be successful when they sell stock, and they end up regretting it. Oh my gosh, it tripled in the 2 years after I sold it. Okay. That's why I believe you shouldn't really get yourself into that unless you're following some kind of strategy, some kind of piggyback strategy, where you're following, hedge funds, and, when they sell, you sell, and you have something specific, or you're doing like the dogs of the Dow strategy, right? Where once a year you line up the stocks, you follow the strategy, and you make whatever changes you need. That's fine. I'm not saying those are good strategies or bad strategies. I'm not recommending them, but there is they have a scientific, it's not scientific, but there is a method for working the strategy. Okay, you just follow a plan and you do it on a specific date at a specific time. You make the changes, and it is what it is. But that's why you're buying the strategy, right? When you don't do that, it gets really, 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 really tough. The semiconductors dropped 20%. Well, I better buy them back. Well, maybe they're going to drop another 20%. Nobody knows, right? All these things I'm talking about, and it sounds like I'm wishy-washy, and in fact I am wishy-washy because there is really no answer out there of when one should sell. It is very, very difficult. If I haven't said that 8 times and made it clear yet, I'll say it for the 9th time. It is complicated, not simple. And like I said, you have to be happy with what you end up accomplishing, what you end up making. Because if you keep sort of crying over spilled milk, oh my God, I could have made another 50%, I could have made another 60%, you're going to drive yourself absolutely batty, because we all have those stories. I have a list of those. Had I not sold, again, I wouldn't be here. I would have been retired. But I sold. That's just life, okay? And that's why it's probably better just to stick with indices and let it rip. Don't do anything because you don't have to think about it. Okay? So selling is tough. Buying is easy, but selling is tough. You've been tuning in to the Aaron Katsman Show. We speak about your life, money, and your investments. If you like this content, please hit the like button below if you've not yet done so. Please subscribe to both the YouTube channel and to the podcast. And if you think somebody might find this of interest, why don't you click the share button and you can share it with them as well. Thanks so much for tuning in, and we'll speak to you soon.